Yo, what's going on? It's your boy Chike Investing, aka the IC 2022 model trader on YouTube. All right, we're going to be going over a very interesting topic today that I'm going to be referencing as anticipating intraday market reversals, right? So you can see that we started off the AM going lower, but then why did we reverse higher? That's the key question. Okay, we're going to solve that through top-down analysis because higher time frames. What on this channel? What do we say? Trump lower time frames. Okay. Here's the second thing we'll also be talking about, right? We're going to be talking about anticipating breaking of market structure, especially on a daily, right? So, for example, a lot of times that you've seen that we've been, maybe respecting premium arrays and running lower, right? We've been making a series of lower highs and lower lows, lower highs and lower lows, and we're downtrending. But then you have a sweep of liquidity and price is likely to break market structure after that if you are bullish. So how can we anticipate that we're not going to be looking for shorts anymore in the when we get back to a premium range? How do we know price is just going to continue higher? Those are the kind of things we're going to be talking about. That makes sense. Make sure you press that like button, right? That's what it's for. Thanks for already pressing it. You're the GOAT. Subscribe, press the notification bell as well so you don't miss a single video. Leave a comment below if you have any questions. You can even leave in a comment right now just saying hi or hello. Or you can also join the Discord below as well and ask me any questions. Now, let's get right to it here. Let's start with the daily profile. Okay. So on the daily, what has been transpiring? Okay. Well, it's probably important that we speak about the weekly profile first. Last week, we ran lower, or 2 weeks ago, we ran lower, inverting this fair value gap, right? After wicking higher here, creating a series of bearish order blocks, right? We finally inverted this weekly level. But if you pay attention to my weekly series, I told you that the next candle that it closes after this IFVG needs to continue to expand away. If it purges and then comes back into the range, it's actually a mohawk and we are still being supported by this FVG. Until we expand away, this FVG is not done supporting this particular market structure. And that's why this is how you should treat every PD array. It looks like it's going to invert. You do not want to see the next candle come back, especially in close above the constant encroachment of it, right? So what does that look like on the daily? On the daily, price runs lower, sweeping liquidity below here, but then ends up reverting higher, okay, and closing back into that range. And so the daily has recently been bullish, and the weekly is still telling you that we are overall bullish. That's the first sign that you can anticipate that, yes, we've been making, a high here, lower low, high here, lower low, high here, lower low. But that weekly context that just happened is telling us that price is actually bullish on a higher time frame. And then when you come down into the daily time frame, you can see that the market structure is also supporting what we are seeing as a higher time frame drawing liquidity, right? So on the daily, price is making a bullish order block after reacting off of this candle's wick, right? We're in the upper half of this candle's wick. We then invert this daily SIBI, right? After wicking into it once. And then we come back and tap on the top of this daily IFVG now, IFVG SIBI, now an inverted FVG. We find some resistance at the constant encroachment of this weekly, BISI, right, that we talked about. Plus, you can't see it, but there's a very tiny FVG SIBI here from the daily, right here. That price ended up inverting as well. And on the next day, we run lower, come back to the open of this daily order block, and then extend higher in the day. So what is this going to look like? On the lower time frame, this is really going to look like a Judas swing, right? You're coming into the morning, you think, oh yeah, we just returned back to a premium. And we're hitting this order block and we're ready to run lower again, just like we have, right? But that's not the case. Look at this below here. This is the ES chart, okay? So this ES chart is just a line chart of what's happening, in the corresponding ES price movement. This high right here corresponds to this daily high. Notice how at this point, ES has now taken out this high a lot, right? So ES has broken market structure, right? So ES purged liquidity and then broke market structure. It is very, very likely that NQ is going to do the same over the next couple of days, right? Why is that so? That's the case because, first of all, equity markets are typically in sync unless there's SMT. Now, the reason why I wouldn't be anticipating SMT is because look at this bullish order flow. One, right? We're clearly showing bullish order flow. We're not showing a willingness to run in the opposite direction. Two, ES is probably well closed above this high, right? Right. It's not like a wick purge and then come back into the range. It's well closed above the high, right? That is very bullish in nature. And so NQ is acting like a sixth sister where ES is really dragging it along. That's the difference. And plus the weekly context is telling you that we're bullish. So, you have to keep context in mind. Context is going to be the difference between sixth sister and SMT. All right. Now, we end up closing above the previous day high. And that's also telling me that we are probably ready to accelerate to take out this high eventually. Okay. On the 4 hour, what do you have? So on the 4 hour, overnight, we dipped into this 4 hour fair value gap, right? And this area right here also was the TGIF range, right? Which is the 20-30% range of the previous weekly candle, which we had not touched on Friday. So sometimes coming into the next day or sometime in the early of the next week, if you don't touch that TGIF range on Friday, it can come back, right? It can come back and tap that before it's ready to go. So multiple confluences telling me that this is an area of interest, okay? And then price wicks higher, purging liquidity below these relatively equal lows. Okay, at this point, you should be thinking the 4 hour is looking dummy bullish, right? Plus, we've inverted this 4 hour IFVG SIBI over here to the left at this point. We inverted it on this candle, came back to the consequent encroachment and closed above it as well on the upper half of it. It's telling you that price is likely to be bullish. The reason why we do this higher time frame top down analysis is so that you can get confidence that your order flow on a lower time frame is really going to be going primarily in a certain direction, right? And this is screaming bullish order flow. Okay. And we're seeing how price is interacting with PD arrays. You can even see with this weekly PD array right here, this weekly BISI, look at how we're operating only in the upper half of it. We only tapped, this 4 hour BISI, but then didn't even close inside of it, right? We wicked away and rejected after purging liquidity. What do you think is likely to happen next based on everything that you always watch in price action? We're likely to be bullish, okay? You don't want to be taking shorts at this time unless you're seeing a confirmation on the 4 hour, right? 4 hour, 1 hour, or even the daily that we are ready to go back down yet, okay? I remember that price, came up here going into London and tapped this previous day high, right, at this point, and then created this bearish order block coming into the morning, right? But it's really just tapping this rejection block wick to run higher. Once you see the 4 hour close like this and it closes outside of the weekly BISI, it's probably going to continue to run higher, right? This is not a break of market structure. Even though we went below this low, it's not a bearish order block yet, right? Because the context is that price is still going to run higher. There's no change in the state of delivery really here, okay? And so price runs higher, ends up closing with the previous day high. On the 1 hour, going into Asian, we purge these lows, right? These trend line lows over here, right? What I mean by trend line, retail looks as this as a trend line. And so, they're looking for it when price expands below this as a potential fake breakout or as a potential breakout, and they start shorting. But what is smart money doing? We're accumulating those shorts to actually run higher and long. Okay, so price sweeps that liquidity, comes back into that fair value gap, ends up returning back to this 1 hour SIBI, inverts that, inverts this 1 hour SIBI level, hovers in the upper half of that, comes back and closes inside the bottom half of the consequent encroachment. But the next candle, you can see that we expand back into it, telling you that we're really bullish, right? We're actually bullish. Price is not showing a willingness to run lower. Comes back and inverts this 1 hour SIBI, right? Again. And going into the PM, we end up making the high day, right? In between that 3 to 4 o'clock session. Or right after 4, it looks like, actually. Let's go on the 15-minute. All right, so on the 15-minute, all right, overnight, we're trickling higher. We've closed over this 1 hour SIBI at this point, right? And what time is this? It's coming to 6:45 a.m., right around at 7 o'clock. Pre-market starts to kick off. Price runs one more time higher, purging liquidity here, and then breaking market structure lower, right? And taking out this trend line liquidity. Now, at this point, this would look like a nice 22 model, right? 22 model is, that's what we trade on this channel. 22 model is when you make a low like this, purge liquidity above this recent high, and then break market structure lower, fair value gap, price returns back to it, and then you run lower, right? And so let's say you're making a series of higher highs, right? You purge this high over here, maybe you hit a PD array, you run lower and break market structure, you have a fair value gap, return back to that, and run lower. Now, this 15-minute looks like a really good fair value gap. But why is it not, right? Because the higher time frame analysis is telling you that we are bullish. Plus, This is just a purge of liquidity below here, not a break of market structure. There's a difference. Market structure is telling you that market structure is going to start following a pattern and we're going to continue in that direction. But no, this is really a Judas swing, right? Coming into the 9:30 open, and then we have that 10 a.m. reversal, right? At 10 a.m. we then reverse, right? Because the context is bullish. So at 9:30, I'm anticipating a run against this trend line liquidity, right? Come back lower and then end up actually reversing to run higher. Now, admittedly speaking, I had, I had taken a short here because I was trying to play that Judas swing, but also admittedly, like I saw SMT between, I believe, this high and this high somewhere around with ES, and I was like, okay, maybe we'll start off, bearish for the first couple of minutes, or sorry, for like the first hour or so I could catch a short-term scalp short, right, to end up taking out this low. But we don't take out that low, right? Price runs higher because you want to be trading alongside the higher time frame trend. You don't want to be taking retracements or short-term scalps in the opposite direction, because those are very, very hard to catch, right? If most traders, especially if you're a beginner or intermediate, it's best for you to actually just do stuff alongside the trend of where price is likely to go. And this is a new week opening gap right here. You can see we interacted that a couple of times after creating this bullish order block, tapping it a few times, right? But wicking back into it, and then coming back one more time here around 11:30 and run against that range, right? At 11:30, we start running against the most recent range, create a fair value gap right here. 12:15, we return back to that, then expand higher, make a high by the end of the lunch session, going into 1 to 1:30, and then we consolidate for the rest of the PM. But make one more high here in that 3 to 4 o'clock hour, because we make the high of the day here, because it's going to be a daily bullish candle. Now on the 5-minute, okay, on the 5-minute, see these clear LRRs, right, that form prior to 9:30. We end up expanding lower, right? Take out a lot of this trend line liquidity, return back to this 5-minute SIBI, run lower again, creating a bearish order block. Then this is where I took my short. We ran lower one more time, break even here, break market structure above this high, right? We then come and tap this this new week opening gap a couple times, right? 1050 macro, we start to create a bullish order block, but then run lower one more time to this candle's wick, stops in the upper half of it, right? And this is now where we have another 5-minute 22 model, right? You can take this, it's very clear, it's very obvious, and it's in line with your bias, right? We know that we're bullish. Nice little LOR target above here. A lot of the liquidity below here has been swept. There's so much liquidity above here, right? So we know that, higher time frame order flow is bullish. We know that liquidity is above here as well. So it makes sense for us to be taking longs here at this point, right? You do have these 1-hour FVGs that are in the way, but if you know that the 4-hour market structure or the daily market structure is supporting you to take a long, then you don't have to worry about lower time frame, SIBIs or FVGs. You may just have to be a little bit more careful and make sure your stop management is a little bit more, refined as well, or anticipate a lot more higher resistance moves, right? But going to 11:30, you have this high that forms, low that purchases out this short-term low, break a market structure above this high, fair value gap that we return back to, right, at 12:15, right? We tap it once at 12, we come back to purchase, come back to tap the fair value gap one more time, right? And purging this low, then running higher, right? So continuing the lunch session. How do we know this lunch session is going to have a move, right? It makes sense because the previous hour, right, like from 10:30 here to about 12 o'clock was pretty garbage. A lot of times when that happens, you can see that the next 90 minutes you could have a large swing. So you see from 12 all the way from like here from 11:30 all the way till 1 o'clock, you can see price starts to move. And then we create a new high and end up basically, once you move a lot in lunch, the next session, it's likely to be trash. So from 1 to about 3 o'clock, you don't see a lot of movement. And then you have one more purge here below this low. I don't think we take out this low. So we have relatively equal lows here, and price spikes in the last 5 minutes of the day. So no longs here, nothing to do in this PM session. Once I saw a large lunch move like this, I know that this is going to happen. It's very, very likely that this is going to happen, going into the next couple of hours. The only reason why I would have still tasted long is because there's this high over here, right? That I know it's likely to get tapped, especially with this new day opening gap that is right above that high as well. So it's going to act like a magnet. Okay. Now on the 1 minute, let's end it off here. Nice LRR, as you can see, even cleaner. Return back to that 5-minute fair value gap that we talked about before. Price runs lower one more time, right? A few more, runs back into the range, runs lower, takes out these relatively equal lows. And then we run higher here, right? Coming into 10 o'clock, we now run higher, consolidate. Okay, nothing to do here pretty much. consolidate all the way until when? Till 11:30. 11:30. Past then, we start to see a short-term breaking market, short-term purchase liquidity below these lows, right? Now you have these relatively equal lows right here, but this low took out these equal lows over here, right? So it's hard for this low to get broken. And we know, like, so if you're waiting for price to run here and take this out, you'd be incorrect because you see these lows that got taken out. So this is really a rejection block that price is going to be centered around. Should not get broken, right? Price fit to low, high, lower low, breaking market structure higher, right? At this point, we saw this 1 minute IFVG in the way. So honestly, probably may not have taken that just given the, you know, how trash this is and how we're inside a 1 hour IFVG, right? Or 1 hour FVG SIBI. I want to see a much more clear breaking market structure like we did on the 5 minute. And that, you know, on the 5 minute, you would see that's the retracement there at 12:15 coming back into this rally gap. And then you also have another 22 model that forms here: low, high, lower low, right? Breaks purchase liquidity here, breaks market structure higher. At this point, if you miss the first prior moves, you know for sure that price is likely to continue higher. So you wait for the first retracement once you broke your market structure. But then price doesn't really give you that entry. I was gonna take this, but price didn't really give me an entry. And then price runs higher. Okay. Now what you can do is that once you see this fair value get formed and you anticipate that price is going to run, right? Which is possible sometimes, right? If we close above this high with a lot of volume, a lot of times you can just place your stop loss below maybe this breaker move right here, but you have this fair value gap, and you have the breaker here, you have a bullish order block right here, at least 3 P arrays, and you can aim for like a 1 to 3, or you can at least aim for this new day opening gap above that with that liquidity over there. Now you could have taken out most of your trade, once you get right here, right? Because like a lot of times I like to take out most of my trade. First of all, I would take out like at least half my trade above here. Then I would take another majority of like at least 80% of my trade should be gone once I'm this close to my take profit. Because a lot of times I've noticed that price can just be finicky, especially after a large move, right? You're anticipating that PM could have just some trash movement. It could have stopped me back at break even. So I've taken out most of my trade here with partials. But then ultimately, if I had held all the way until 4 o'clock, would have got, profit. So that has been today's daily review. Hopefully you guys learned a few things. I'll catch you guys in the next video. Peace and love.